Right now, somewhere in America, somebody just spent $500 on stuff they won't remember by next week. Meanwhile, that same $500 invested every single month could quietly turn into over $1 million. Not through luck, not through some crypto gamble, through the most boring, predictable, proven wealth-building machine in history. And that's exactly what we're going to break down today. Here's the reality most people never hear. The U.S. personal savings rate right now is sitting around 4.4%. That means the average American household earning roughly $83,000 a year is saving less than $300 a month. But here's the thing. $500 a month is not some impossible number reserved for people making six figures. It's $125 a week. It's $16.67 a day. That's less than what most people spend on a daily coffee run and a lunch they didn't pack. The difference between wealth and stress isn't a massive salary. It's what you do with the money already flowing through your hands. So, let's get into the real numbers. And I'm not going to sugarcoat them or pump them up with fantasy returns. We're going to use the S&P 500 historical average of roughly 10% annual returns. That's the actual long-term track record going back almost a century, including crashes, recessions, and pandemics. Year 1 through 10. You invest $500 every single month into a broad market index fund. After 10 years, you've personally put in $60,000. But your account doesn't show $60,000. It shows approximately $102,000. You've gained over $42,000 in returns, and you didn't do anything special. You didn't pick stocks. You didn't watch CNBC every morning. You set it up, and you let it ride. At this stage, compound interest is doing the stretching. It's warming up. The real show hasn't even started yet. Year 11 through 20. This is where things start getting wild. You keep doing the exact same thing. $500 a month, same index fund, same boring strategy. By the end of year 20, you've invested $120,000 total out of pocket. But your account is now sitting at roughly $378,000. You put in $120,000, and the market handed you an extra $258,000, more than double your own contributions. This is the compounding curve bending. Your money is now earning money on top of money it already earned. Year 21 through 30. This final decade is where ordinary people become millionaires, and nobody sees it coming. Because the whole time, nothing looked flashy. Same $500, same account, same monthly transfer. But by year 30, your total out-of-pocket investment is $180,000, and your account balance has grown to approximately $1,130,000. You are now a millionaire. Not from an inheritance, not from a tech startup, from $16 a day and the patience to leave it alone. Over $950,000 of that total is pure investment growth, money you never earned at a job, money that was built while you slept, while you went on vacation, while you lived your life. And here's something most people overlook. During those 30 years, the market crashed multiple times. It always does. There were recessions, corrections, panic headlines, and days when your account dropped thousands of dollars in a single week. But every single time in history, the market recovered and climbed higher. The people who lost money weren't the ones who invested. They were the ones who panicked and pulled out. Staying in the game is the whole game. Your only job is to keep making that $500 transfer and ignore the noise. Now, let's talk about what happens if you want to be more conservative. Maybe 10% feels too aggressive for you. Fair enough. Let's use 7%, which accounts for inflation and gives a more cautious picture. At 7%, $500 a month for 10 years gives you about $86,500. After 20 years, you're looking at roughly $260,000. And after 30 years, you'd have around $611,000. That's not $1,000,000, but it's $611,000 you would not have if you did nothing. That's still life-changing money. That's a paid-off house. That's retirement security. That's freedom from ever worrying about a surprise $400 expense again. And here's the part that hurts a little. Every year you wait costs you big. If you start at 25 and invest until 55, you get the full 30-year ride to $1,130,000 at 10%. But if you wait until 35, you only get 20 years, and you end up with $378,000. That 10-year delay didn't cost you 10 years of contributions, which would be $60,000. It cost you over $750,000 in missed growth. Time isn't just money. Time is the multiplier that turns small money into generational wealth. Now, where should this $500 actually go? For most people, the simplest path is a Roth IRA. In 2026, you can contribute up to $7,500 a year if you're under 50. That's $625 a month. So $500 fits perfectly. Your money grows tax-free, and when you pull it out in retirement, you owe zero in taxes on the gains. Inside that Roth IRA, you invest in a total stock market index fund or an S&P 500 index fund. Expense ratios under 0.10%. If you've already maxed out your Roth, the next step is your employer's 401k, especially if they match contributions. That match is free money, and skipping it is like refusing a raise. Let's put the tax advantage into perspective. If your $1,130,000 was sitting in a regular taxable brokerage account, you'd owe capital gains taxes when you sell. Depending on your bracket, that could mean handing over $140,000 or more to the IRS. Inside a Roth IRA, that same money comes out completely tax-free. The biggest lie in personal finance is that you need a lot of money to build wealth. You don't. You need consistency, time, and a system that works without you babysitting it. $500 a month is not glamorous. Nobody's posting that on social media. Nobody's making it rain at the club with an automatic index fund transfer. But 30 years from now, the people who did this will have something almost nobody else has. Options. Real options. The option to retire early. The option to help their kids. The option to say no to a job they hate. So, here's what I want you to do right now. Open a Roth IRA if you don't have one. Set up an automatic monthly transfer of whatever you can. Start today, because the market doesn't care if you're ready. It just rewards those who show up. If this breakdown made something click, hit subscribe and turn on notifications. Thanks for watching, and I'll see you in the next one.